Okay, so I want to continue on the what we call the ending stock for raw material and finished good. So of course, this are going to be all information that you put here. They are going to be appeared in the balance sheet. Yeah, you will see that stock for finished good how much and stock for raw material. So they are considered as asset, meaning that they are the what we call an income for your for your company. So that's why you need to put some record on that. Okay, only if you have. So normally this ending stock for raw material is based on this value. Okay, so for example, end of purchase projection. Okay, you purchase 4,400. Okay, you made the purchase, but after end of the year you realize that um, you have got about, let's say, 10,000 left. Okay, so meaning that another let's say 34,000 has been used, so the leftover 10,000 you can put that numbers, yes, and then you make some increment by, let's say, 5%, or decrease what you call increment by 2%, or whatever numbers that you think reasonable. Similarly, for the ending stock of finished good, actually has to do with the sales that you made here, right? The sales that you made here. So normally we made sales, let's say 5,000, 76,000, right? So we sell about let's say 90% of our product. Okay, we can make the sale. Sorry, we sell all the product that we have, 576, but of course somehow we have some leftover, meaning that some product that we don't sell. So we estimate how much is value that left in the market, or in our store. The good example, if you look at the 7-Eleven, normally 7-Eleven they do some what we call check stock. Okay, stock checking, so they want to see after end of this, for example 2021, they want to see how much stock or inventory left. So that will going to be value, I mean, the asset that they will have in the market. So then they make some what we call adjustment, increment by, for example, 2 or 3%. So you choose on your own. So you can put any numbers if you think that they are reasonable, especially when you are manufacturing companies. Okay, now about the tax rate, normally they impose 28% of the corporate income tax, especially this one applicable for the private limited company. Those that involve as a partnership or sole proprietorship, especially the sole proprietorship, sorry, sole proprietorship, they don't have to pay this, the corporate income tax. If I'm not mistaken, this one is around 27%. Rather than 28, I think it is a 27%. And this thing will affect your net income in your balance sheet. Sorry, in your income statement. Okay. So you see that here. Okay. After net before tax, once you put the tax, right? Then they will deduct that. Then we will have the net after profit tax. Okay. So you see that here the tax is zero. Why is that? Because this company is not required to pay the tax. I think one of the reason, I think because they are not eligible to pay the tax, because their net profit before tax is quite low, right? So I think that's one of the reason, right? But actually we need to check it later if there is things that left. Okay, on the business entity, you have to choose from 1, 2, or 3. But I suggest you to choose number 2, right? Remember? Okay, number 2, right? So if you choose number 2, automatically you don't pay the tax. Okay, I think you don't pay the tax. That's why it is. I think that's why it is 0, right? Similarly, if you put 3, 3, okay, you also pay tax 0. But I think if you put 1, let's say you put 1, I think you have to pay the tax. See, you have to pay the tax. So it affects those that set the tax here. If you set that 2, then you don't have to pay tax. Similarly, if you set it 3. Then uh, we're talking about the nature of business. So I keep asking my students, those that doing the internet cafe, you may choose the number 3, service. Therefore, if you service, you don't have to fill up this section. You don't have to, right? But if you do the number 1, manufacturing, okay, or number 2, trading, for example, kedai runcit tu adalah trading, di 7-Eleven tu adalah trading. Yang manufacturing ni, those that actually involved in producing the raw material, at the same time they produce the finished product. So they use the raw material to produce the finished product. Contoh bake kan, di bakery. So that one is considered as a number one. It also could be considered as a number two, right? But I think that they are more suitable for the number one because it involves of raw materials. Trading is more on sales, direct sales, not service, sales macam kedai-kedai tu kan. So that one trading. So I suggest you to choose either number 1 or number 3. Okay, now we go for the term of loan. So because just now there is possibility that you are going to use the loan. Okay, term loan, as I told you, is a loan that made in the form of the cash, and the hire purchase is the loan that you make in the form of non-cash, especially for buying the van or the fixed asset such as the machines, right? So imagine that the interest rate is 5%. I think 5% is quite high. Term loan is 5 years, right? And the payment method is 2, which is annual rate, or what we call the reducing balance, or sometimes it is called you can refer to your slide, it is called kita panggil outstanding balance. You may choose the number 1 flat rate, right? Also, and for the hire purchase, the interest rate is 5%, hire purchase duration is 5 years. You can change this one, depends on your priority. But normally, do not put too higher interest rate because it means you have to pay a higher cost. So will this impact other tables? Yes. If you change these two, it affect the other tables. Which table? This table, which is your tables on the hire purchase amortization schedules. So you see that you have 5 years here, right? For your for your loan, all right? But you have zero purchase you have zero for hire purchase. Why is that? Because you didn't change your project implementation cost. Only when you change it, then there will be the information will appear here. Okay, why is that? Because all these expenses that we call project implementation cost that came from input that we have here, okay, from this department, they are translated into this section. They all are paid by loan. Therefore, no wonder that your table, they are only appear in this section. 210,000, similar to 210,000. So they all are in the form of cash. Sorry, in the form of cash loan. Okay, but once you change it, therefore there will be a small change in here. All right. So I will show you after I stop with this video so that you can have idea about how we change this thing. All right. So sorry, take a look here. So they all are in the form of the cash loan. So just leave this area as it is. I mean, just assume that we have these numbers, 5%, 5 years, and we choose the number 1 as our tools. If you want to change the interest rate, it's okay, but always lower than 5%, because if it is higher, then you have to pay more and more for the cost of doing business. Okay, I will stop here, and we will go for the next tab here later.